Hi traders and welcome in middle market middle week market update. My name is Giancarlo Prisco and today uh, I am very happy to do this analysis because it's probably after the CPI data of yesterday that create a very strong change of the trend inside the market. Yesterday we have assist a very strong drop because the data of inflation show a little adjustment in terms of small uptrend 0.2 for CPI core inflation, but essentially we have assist a very interesting movement probably because market start a very important drop. It means market create the condition to start an important drop. I would like to show you something because 15 weeks market going up and 1 week just take a important retracement. It means this situation not happen from 1972, guys. So it's incredible situation, and we have taken very good movement yesterday, especially in scalping. So indexes now in this moment are in a particular situation because what we have to do is to take in consideration the fact that the Standard & Poor, after long time, could start a very important retracement. I'm not speaking about a retracement, a change of the trend, sorry, a reversal, but we can assist a strong sell-off. So what is important in this moment is focus our attention on the fact that from a statistical point of view, the second part of February is not bullish for Standard & Poor and of course for USA indexes. So the chance to see more drop in the next days is very high, especially between Thursday and Friday when we have a particular data that practically create more pressure, especially the data of Friday with PPI and the data on Thursday that touch some important element of USA economy. So any data that could show strong momentum could create more bearish pressure because what is clear from yesterday data is that inflation still remain quite strong and the Federal Reserve could take more time before they start to do the interest rate cut. But taking consideration that Powell never say that they start interest rate cut in March or in January. This is an idea of market. Now the operators start to follow a little more the line of Federal Reserve. As I tell you last time, there are a balance that they have to leave to zero that they are putting in market and repo to help the bank. And this balance will finish around the end of the first semester. So the first rate cut probably will come between June and September, not before. And they are speaking about 3 interest cut and not 6, like for example Goldman Sachs do. So in this sense, all these elements create this situation create a problem because now the operator start to understand that will be not so run. But there is a tip that we have to take from the last CPI data. If it's true that we have some adjustment with food and energy and some sanitary cost hike or the cost of rental, there are a problem that we have to take in consideration in the next months. If the data of inflation every month, at least for 2-3 months, show a continued recovery of the level, market will not stay happy of this because Federal Reserve could rise interest rate and create a super sell-off. I think that is not possible, something like this, but this is an element that you have to take in consideration from the data of yesterday. From technical point of view, Standard & Poor show a very important drop. And now the idea is to continue to find a short opportunity. The level that we discussed yesterday is around the 50,000, 5,000 level. and the breakout of 4,984.72. This is the intermediate zone that we see with 15-minute chart create the condition for which the market could start to attack this zone. And this target is very possible for the end of February. So this is a situation that we can see more bearish drop from the from this week, but stronger from next week. If we're going in 15-minute charts with Standard & Poor's, we will see probably what happened yesterday with the market that dropped dramatically in the moment data was published with the super volume. Another super volume enter probably in the zone, and market now is attacking probably in the level where they start to going up but was not able to contain, and the second part of session market start to drop dramatically, and now we are attacking this support. So the problem in this moment is the fact that market return bearish, and in this sense we can assist more drop. What we can do is try to open a trade. I have to reduce a little the slides because last time was too much. I also maintain an order, and we can put a stop loss here, and we can try to attack, for example, the previous hike for the end of the day. Okay, so my idea is to see a return on price in this zone, but really, if I want to be a little more aggressive, the real target of this level could be at least this point. So essentially, price could start a more vertical drop, and they continue to push down very strong. So in this moment, the price has two targets. And this is very important, guys, because the real problem is the close of yesterday. So the idea is if we have the chance to break the last volume, enter in the end of session. So if market return below this level, you can start to open a trade and try to going down. So in this moment, what is possible is to see a stronger drop during this session and tomorrow, and market start a vertical drop. So we can try to leave this trade until Friday. Stop losses, it's okay. We will use part of the profits of $300 and we try to take $500. So the trade has a good idea, in my opinion. So we can try to enjoy this momentum. Remember that when we see this super volumetric bar, this is a sign that there are a big interest of professionals. So we see probably that this zone that was hidden various times, if we price go through this zone, you have to start to see a vertical drop. So will be a fantastic short that I will try now to enjoy for like a weekly trade. So on Friday, technically, I have to close. Depend, of course, how market move the stop loss in trailing. And now on Nasdaq, the same. Here the situation remain quite complicated. In 50-minute chart, we are start to see what happened yesterday. And in this sense, we will see probably that after the big drop of the data, the drop of Nasdaq is a little more contained because you have to understand that what was sold a lot yesterday was the cyclical part of the stock, but the AI semiconductor continue to be attacked with bullish pressure because they were just the start of this movement. So all the technology stock, Palantir, Salesforce, Nvidia, AMR, etc., will be continue to assist strong liquidity entering in the market. So we can have a chance for very important opportunity. So in this sense, we see the same situation. There was a volumetric concentration in this level. So we can put also a rectangle and we can have an idea that this zone is super important. So to have a short, I need on weekly basis that price break this 70,569. So this is the reason why open short in Nasdaq in this moment, it's quite complicated because the operator continue to buy the tech stock. So what I would like to recommend to take care to short Nasdaq because any drop we continue to see a strong buy pressure. In terms of level, we know that we have reached the 18,000 level on these instruments. The probabilistic level that we have to try to reach this year is 20,000, but probably on this zone we start to see some nervousness. And when you want to start to see some short signal, guys, remember that find this volumetric level is very important, because in the moment market start to push down, for example, Monday was clear that there was a big chance to short, because see what they do, pump, pump, and pump. They continue to attack any level, and in the moment that they start to leave this resistance, and you see enter a vertical volume in a so small place, you can understand that market was ready to drop. So here we have the resistance of Nasdaq. After distribution process, market start to drop dramatic. So you see that we have a big plan here, and we know exactly that the price on this level, until we not break this extreme, we have an up and down. We can do scalping on interest, but price still is difficult to trade on this extreme. So, for example, this is a good zone to short, and this is a good zone to buy. In this sense, you see, for example, also what happened with the Standard & Poor, that is going up a little. So I maintain the position for now, and in this sense, we can see that now price is sensitive on this level. The short in any way is good to try, because if market break this zone, we can start a vertical drop. But if I take stop loss, I can evaluate next week or another short, or eventually switch the position. Okay. So the idea to open this trade is good. I see I put a correct short stop loss, so we can try to do that. Discussion is quite more complicated for Dow Jones, that also reach a very sensitive level. For example, here, the same situation, Tuesday candle. Here we have assessed another important level. And in this sense, we will see that this level create some pressure, but price continue to attack this zone. And here there are the support. Take in consideration that here we have a previous level on 177. Dow in this moment is trying to recover this level. If they do, I cannot exclude an attack on this level today. So the chance to going up is very high, in my opinion. It's just a question to take in consideration that in this moment, the price need time to do an adjustment. If I go in 1 minute chart, for example, show you, this is typical movement that can create a reversal mood. The problem is that you cannot buy on this movement, but you need to wait something like this, so you can start to buy, or something like this, because if market start to do something like this, you enter in a peak, and it's a problem. The what is important in this sense, guys, is try to focus your attention on the level where market is very sensitive. So you see this level, market was not able to continue to go up, and they do a drop, but essentially we have a chance for a continuation of uptrend later on. It's more choppy, the market today, essentially. But take care, guys, because if Friday market starts to do vertical drop, will be a very interesting short opportunity. One of the stock that the index that could create more pressure of this type is probably the Dow Jones. Because Dow Jones, for example, there are a big import. This is the zone of Powell speech. You see that they start to break. And of course, they will not arrive so fast, but if they break probably this minimum, we can start to see a very important vertical drop. The difference is probably with Nasdaq, that is very interesting. See that the level of 31 of January was very far. So you can understand probably with this price structure, the difference between the Nasdaq and down. And this is why, because the operator are more interested to buy tech in this moment. If we take a look at Standard & Poor, you will see the same price is arrived on a particular level. And here we will see that difference, the 31 January is very far. So now what is important is that any pullback creates something like this on weekly basis. So we can have also next week something like this. This is the structure that we are expecting. But remember that if one of resistance like 5,015 level For example, Nasdaq 70,920 level, and Dow 38,600 level will be recovery on daily basis. Take care, because market could return to going up. So what we have assisted an healthy correction, but remember that market still could still have a chance to have a more drop. So I strongly recommend to take care with long, at least until the end of February, first week of March. Anyway, next week we are in the very important cyclical part of the year, so we can see together in the middle market update if we have a chance to have more short pressure. Thank you very much for your attention. I hope you enjoy the analysis. Tomorrow I will leave some tips about the market, so don't lose the video, because we will speak about how to trade properly in the high volatility. Thank you very much. Have a nice rest of the day, and see you tomorrow. Bye bye.